You lay out the track of your belief of LUV exclamation mark, the love opportunities. I want to know where you're leaning into. L-shaped recovery, UV, or the exclamation mark. What has the greatest propensity at the moment in the HSBC house?
Well, if you look, economists came out with new forecasts, and you were talking about other houses coming out with new forecasts. No one's revising up. And we're talking about the U.S. economy falling on the annualized basis in the second quarter, 45%. I mean, that ain't no V, baby. So it's much more looking like, from our economist side, a U or an L-shaped. And that's why we talk about love, the L, the U, the V. And I think this V's out of the question. Of course, purchasing manager surveys are going to go from 5 or 7 back to 30, but 30 is still a U. So, yes, we're going to get a bounce. I mean, these numbers are single digits. It's crazy. So we're in the depth, the bottom pit at the moment. But the point is, of course, we're going to get a rebound. Of course, there's pent-up demand and things like that. But how long is it going to take for the level of the economy to get back to where we were before the virus? And we're talking some emerging markets not even in 2 years. That looks like a U to me.
Yeah. David, the V scenario is the one scenario where you see the dollar losing out. And you've just said that you think that an L and a U is much more likely. So therefore, How much longer does the dollar reign supreme?
Well, the dollar will reign supreme in some of the, as you said, when we move off this risk on, risk off. That's where we are at the moment. We wake up, we look at the equity market. If it's down a lot, we risk off. If it's up a lot, we risk on. And that's how we are at the moment. But we're going to gravitate, as you say, or you suggest, we're going to gravitate towards one of these letters. And once we do, then the whole vista of foreign exchange changes, and the dollar will weaken a bit. But that's still a little way out. I mean, I wouldn't be too premature. The dollar's still the king of the pile.
The dollar's still king of the pile. I like that. But you talk about RoRo as being at levels that still are reminiscent of the global financial crisis. That's 12 years ago. In that scenario where RoRo remains the dominant theme, where does the dollar excel? Does it excel against the yen? Does it excel against the euro? Where's the strength of the dollar most manifest for you?
Well, the strength of the dollar is most manifest if we're on a down leg of the V against emerging markets. They've been absolutely smashed to pieces. I mean, we're talking about, some of these countries having currencies, down 25, 30%. The South Africas, the Brazils, the Mexicos have been and the big game changer for EM is they're cutting interest rates into a currency crisis, in a sense. And that is a game changer. Historically, emerging markets raise rates when their currencies are going down. But now they're cutting rates, they're doing QE, so they're saying we don't really care about the currency for the moment. And so those currencies are under massive downward pressure, massive.
I'm really glad you brought that up, David, because I have asked a few people recently, including Mark Mobius, precisely about this, the fact that in a lot of EM, QE is going to be used, if not already, to fund budget deficits. And I've asked whether that's going to put downward pressure on currencies, whether it's going to lead to capital outflows. Some people have said to me, nope, we're not worried about that. It sounds like you are.
What do you mean they're not worried about it? Who are you asking? Who are you having on your show? Obviously you've been downgrading the show having these people on. Come on. What are you talking about? Emerging markets cutting interest rates basically towards the zero bound and doing QE while their currencies are falling 25%. You've got to be kidding me. Of course it's negative for these currencies. They're being absolutely smashed. But should they care? That's a different question. Should they care that the currency is falling? Because usually you care that the currency is falling because it'll create inflation. And inflation creates higher food and energy prices, and that squeezes the real incomes of poor people. So you raise interest rates and you protect the currency and you protect poverty. But if there's no demand, there's no inflation, so you feel you might not have to defend the currency. That's a different story, whether you should or you shouldn't. But the currency is under pressure. They're cutting rates while the currency is falling. They're doing QE. Of course, there's massive downside pressure and further downside pressure on these EM currencies. I don't know who you're speaking to. For goodness sake, you should have me on the show more often.